I mean, this is a thing was a bit of an issue with prudential policy. You require a bank to have a capital buffer or liquidity buffer, and then when the tough times come, if you say, well, you can't use the buffer, then it's not much good to them. So we want to make sure that they have the capacity and not forced to go out to the market to maintain the buffer or the margin above our minimum requirement. So I'd say there's sort of there's a micro sort of rationale and a macro rationale. The micro rationale is just, we don't want to put unnecessary pressure on the banks in light of what's happening in the global funding markets. We want them to be able to use the liquidity buffers that they've built up. The macro aspect is that if they were forced to go out and fund in these difficult markets, and the European problems were persisting, and so the cost of funding was very high, then that's going to have a potential macro effect back in New Zealand in terms of reduced availability of credit and or much higher cost of credit. So we don't want to put additional pressure on credit, cost of credit, and the macroeconomy. So there's those two sides to it.
Why not simply force the banks to raise more of their funding from local term deposit sources by increasing their interest rates?
Well, of course, what happens is when we do put the core funding ratio up, they can meet that requirement either by going to the term markets offshore or the retail funding markets, and that's what they've done. And that's what's contributed to the much more higher level of term deposit rates that we've seen in the past couple of years.
But
relative to wholesale rates, they've gone up a lot, right? And so that's part of the mechanism. So they make the choice. We say you need so much core funding, then we let them make the choice about whether they go for retail deposits or term funding. Now, the retail deposits are more solid. They're a more dependable source of funding in New Zealand, and so, ideally you might say, well, why don't we just require them to get all retail deposit funding? The trouble is that the country is still running a deficit. So if we told them there wouldn't be enough, there's not enough savings to meet those ratios for all the banks. If the country has to borrow, the banks have to do some offshore borrowing.